Hey guys, what's up, how's it going? My name is Rob and welcome back once again for another video. And in today's video, I'm going to be showing you guys what Canadian stocks I'm going to be buying today. And in today's video, we're actually going to particularly be focusing on one Canadian stock. This is one of my favorite stocks. It's actually one of my best performing stocks inside my portfolio outside of Shaw Communications, which is doing its own thing on its own out there. So this Canadian stock I'm going to be talking about today, we'll do a quick little analysis. I'll talk about why I think this is a great company, and I'll show you guys my entire portfolio and go over the regular dividend income and whatnot later on throughout the video. So like usual guys, if you guys enjoy this video and you guys want to see more content, be sure to like the video and subscribe to the channel if you guys want to follow alongside with me as I build up my dividend portfolio and to reach the end goal of 100% living off my dividends. And before we get inside the portfolio and I give you guys an update, I just want to do a quick little call out to my Patreon group. I've kind of set a Patreon page up there, so check that out if you guys want. There's some cool things that you guys can access there, and we're slowly working towards some goals. But other than that guys, I hope you guys enjoy this video, and let's jump inside the portfolio and let's see how things are doing on Wealthsimple Trade. Alright guys, so here's a quick little update on the portfolio before we go into the video and I show you guys the main stock that I'm going to be focusing on today. We have our TFSA, which is almost just under $26,000. Over the past day, we are currently down -1%, so a little bit of a dip this morning, I guess, in the overall market. Over the past week, we're up 1%, which is $211. Over the past month, we're up 5%, which is $1,300. Over the past 3 months, we're up 9%. So a lot of this coming over the past 3 months. Keep in mind that Wealthsimple does, you can see this graph here. Most of this graph is mostly just me putting a lot of money into the portfolio. I've been saving up every single penny, every single dollar I can. Basically, since I've started this portfolio, I've been doing that. And that's basically with the stock growing. The stock's growing and appreciating over time, getting those dividends and whatnot, and also me putting some large deposits. That's what's really made this really go up over the past couple months. So you can see that really big growth here. And over the past year, we're actually up 14% inside the portfolio. Over the past year, once again, you can see some pretty big deposits going in here. This was a big deposit at the end of the year where I moved my personal account into my TFSA. This was just before the new year started in 2021. And then I've just been consistently putting basically as much money as I can into the market to keep it growing. And you guys seen how the portfolio has grown. So all time we were up 12%, which is just shy of under $3,000. It's been hovering around that $3,000 mark for the past couple days or so, which has been all-time highs inside the portfolio. So that's been super cool to see the portfolio perform that well. And going down here, here's a quick little update on some of the stocks inside the portfolio. At some point in time in the future, I do want to set up a spreadsheet that's available for the Patreon group, so you guys can see, have access to my, basically like a replication of my portfolio. I'm just trying to figure out the best way to do that, so that's kind of in the works right now, but check that out if you guys want. But otherwise, I'll give you guys a quick little update here. So, you know, we have Algonquin Power Utilities, we have a couple of shares in there. They haven't been doing too bad because they've had a big dip recently. We have BIP, which is one we bought a little while ago. We just kind of putting a little money in here and there. We have CNR, which is doing okay. A couple shares of Enbridge, Fortistock, H&R REIT, which has actually bounced up quite a bit. I talked about before how I think a lot of the REITs are really undervalued. We've kind of seen that growth, and the growth from H&R REIT and RioCan has been actually quite a bit since I started investing them way back in the beginning of the year. You guys can't see the total return because a lot of that money was in like my personal account, but because I transferred it, it got rid of the growth. But I was sitting at like a 20 to 30% return for both of these REITs. So if we add in the 8%, 11%, you're almost sitting like a 50% return from these REITs since, you know, we first started investing in them way during that pandemic, way back in March of 2020. Manulife we have is up 28%, which is absolutely killing it. TransAlta Renewables is up 13%. Severia Corp, we have a couple shares doing pretty well. Shaw is just doing its thing, up 45%. I don't know what Shaw is doing, but a lot of you guys mentioned it's probably something to do with Rogers buying out Shaw, and that sounds familiar. It's going to be interesting to see what happens with that stock. We're just going to hold it for now, but yeah, pretty interesting with Shaw. And then we have TELUS here, a couple shares. Going down here, we have more of my ETFs and my more, you know, the types of stocks that everybody kind of has. TD stock doing really well, 21%. VDY 14%, which is really good for the overall Canadian market. And then VFE, which took a bit of a hit over the past couple days. And it's actually interesting to see some of the international stocks. We bought this one, VYMI, way back when we first started this portfolio. We're not buying any shares because I didn't know that it was traded in USD, and I didn't understand the conversion thing. And I also didn't understand that I didn't really need that many international stocks inside the portfolio. So that one we just kind of bought and hold. So we might sell this pretty soon since it's up 8%. Or we might just hold it forever. You know, why not? If it's going to grow, it's going to grow, right? But other than that, guys, that's a quick little portfolio update. And the stock I'm going to be focusing on today, and the stock we're going to be buying today, is going to be none other than Manulife. And as you guys can see, up 28%, almost 30% inside of a portfolio, which is pretty crazy. So most of you guys probably know what Manulife is. If you're familiar with the stock market, it's a pretty consistent, pretty popular finance-based stock. They sell insurance plans. They do all kinds of financing services. They're headquartered out of Toronto, and they focus on Canadians, but they also are expanding internationally into a lot of the Asian markets, and that's how they're able to, really keep their earnings growing. And I really like when companies expand and diversify and go to different demographics or go to different countries, different parts of the world and whatnot. That's how businesses grow. And as the Canadian side of the company keeps growing, and that branding keeps going, the other places help to kind of just take it to the next level, right? It gets that worldwide exposure. So, banks like TD and whatnot do that really, really well. And this is the reason why I like Manulife, because they kind of do the same thing. So Manulife has an interesting stock history. The ticker for the company is MFC, in case you guys didn't catch that earlier. They're trading at $27.54 Canadian, currently have a dividend yield of about 4%. So here's the lifetime graph for Manulife here that we pulled up from Google. You guys can see the company has had a pretty good year in the early 2000s, and then when in 2008 here, we had the financial crisis where basically all the finance stocks, all the bank stocks took a big hit, right? Think of this like the pandemic. If you guys went through the pandemic last year, think of this like the coronavirus of back then, even though it's not the same thing, but from the market perspective, it did the same thing. You can see this took a big hit, for about a year or so, and then it started to recover. Kind of did okay, took another big hit, and then 2010 went back up, took another big hit. So even the financial crisis actually put a bigger hit on stocks than the coronavirus so far. I mean, this might still go down. We might still see like next year, the following year, kind of dip back down. We don't know, but we've seen that this stock has faced adversity. It's pretty resilient, and it's recovered and done quite well. And we can see like since then, it's just been growing and growing and growing pretty decently well. And then once again, the coronavirus hit, and it's kind of getting back to pre-pandemic levels and just doing really, really well in terms of stabilizing. So really, really good growth. If we go over the past year, looks like the chart for some reason not available. So if we go over the past 5 years, once again, just to see that growth, we can see that the company was doing pretty good. And then once the pandemic hit, it has a pretty solid recovery. And that's mostly because of the fact that Manulife just has good earnings. I pulled out this little graph here on Yahoo Finance. Just kind of ignore some of these articles and stuff like that. Unfortunately, they make it hard to see some of the earning reports here, so I'm just using the free version. But if you click annually here on the financials, we can see the earnings and how they're basically been growing in the past couple of years. So facing with dividend stocks, and Manulife is a dividend stock, pays a dividend yield of 4%. That's pretty solid. We can see this company has been consistently growing their revenue and their earnings. 2017, 2018 was a bit of a dip. 2019 was a bit of a rise. In 2020, when all companies were having troubles, companies were struggling, Manulife did good. They did really well. In fact, they almost did just as good as the previous year. So that's what allowed the stock to kind of like just do well. And that's why I bought a lot of it in 2020, because the company was doing well and the price of the share price just was sitting low. So it's kind of like easy to predict that eventually this price was going to go up, and that's why we got such a good return off of it. So earnings have been pretty consistent for Manulife. They're constantly growing. But the other thing that's really nice when we add good earnings in conjunction with low payout ratios. So as you guys can see here, I'm using Market Beat. It's just a simple little website. You can punch in Manulife. I'll zoom in here a little bit, and you can check out the payout ratio. So if we take a company that has pretty decent earnings, or at least steadily growing earnings to some degree, and we take a company that has a very, very low payout ratio, Manulife has a payout ratio of 38%. Guys, that's super, super low, especially for a finance-based stock. Basically, what this is saying is that they're taking 38% of their earnings, and that's what's going towards the dividend. The other, I guess it would be like 60% or so would go towards growing the stock in the company. So that's a very, very low payout ratio. You more commonly see like 40 to 50, even 60 to 70 in some cases. So to have that very low payout ratio, this gives me confidence to invest in the company as a dividend investor, because we should see the company grow and increase those dividends over time. And they have been aggressively growing their dividends. Speaking of which, if we take a peek at the dividend growth, we can see here that over the past year, Manulife has increased their dividend by 12%, which is really, really crazy. Over the past 3 years, we've seen an increase of 7.54%, which once again is pretty good. That's on the higher side. That's on the pretty good side. Actually, that's the share growth. Sorry, guys, I misread that. So the 1 year dividend growth is 12%. The 3 year dividend growth is 9%. So that's even better. It's actually sitting around that 10% range. Anything around 5%, I would say, is around average. 10% is kind of in the higher side. Anything above 10 is like really, really high. 5 year growth rate, once again, 10%, and 10-year growth rate is 5%. So over the past 10 years, they've kind of had that average growth rate, but over the past 5 years, the company's been doing really well, and we've seen that kind of reflect in that dividend growth. So lots of dividend growth, the company's constantly growing, which is all nice things to see inside of a stock that you're going to buy. And if we go inside Wealthsimple Trade here, we can see Manulife inside of my portfolio here. So I'm just going to give you guys a quick little recap here on how it's performed for me. So we have 42 shares of Manulife. I've been buying it throughout 2020. Basically just buying it here and there. That's a total value of $1,157, and our all-time performance is up 28%, which is $257. So very good returns. It does have a quarterly dividend that has done quite well for us. We bought it for an average price of $21.43, so we've got it quite a bit on sale during the pandemic. But more importantly, I've just been buying it on a regular basis. Represents about 4.56% of my portfolio, and today it is up 2%, which is pretty cool. So I have $300 today. So just following the main rules that we do with this portfolio is I'm going to put about $200 or so into Manulife, take the other $100, probably put it into an ETF of some kind, either be VFV or VDY. Follow that basic trend of like I usually mention, put something into an ETF. Always remember to invest in ETFs and then put something into individual stocks. So I'm going to buy about, go down here, I'm going to probably buy about 7 shares at Manulife. We'll put that order through, let it go through there, and then I'm going to go back inside the portfolio, take a quick little peek on the ETFs and update you guys on them and see how they are doing. So go down here, and the ones I'm going to focus on today are probably going to be VFE, just because, you know, US stocks have been sitting down. I've been buying a lot of VDY lately. Let's buy a share of VFE. You know, so VFE is a S&P 500. It's a Canadian. It's basically a Canadian currency version of, I don't know what I'm saying there, I lost my train of thought. It's basically a Canadian currency version of the S&P 500, so you can buy into US stocks without paying conversion fees and whatnot, and that's why it's such a cool fund. And it's a pretty good history. If we go over the past 5 years, it's got a history of 85% growth. That's pretty sweet. So we're going to buy 1 share of that, since it is $87 Canadian. And we'll put that through, and that'll be all my buys for today. But before we end the video, I'll go over my monthly dividend income, so you guys can see how the portfolio has been growing in terms of dividend income since we first started it. So here's the dividend income inside the portfolio, and the funny thing I didn't mention earlier is actually Manulife is actually paying a dividend, I think on the 19th, so either probably tomorrow or the next day. So we should expect a nice little juicy dividend from Manulife. I totally forgot to mention that earlier. But as you guys can see here, since we first started this portfolio, the stocks have just been growing, and I've been tracking the dividends on a monthly basis to kind of show you guys the growth. And this is when it comes to dividend investing, it can be a little bit boring because, you know, you're buying some stable, some well-known companies. You know, it's not very interesting. A lot of these companies, there's not really much going on. You just kind of buy them and forget them. So tracking the dividends is one thing I do just to kind of spice it up. It's very satisfying to see things grow over time. I'm sure as you're an investor, you kind of feel the same way. And I think a lot of people feel the same way about that. You know, seeing that money grow on a monthly basis, you know, and then reinvesting it just feels so good. So you guys can see in the beginning, in January, we put 44 cents inside the portfolio. I mean, that's how much we got, was 44 cents. Not even $1 from our first month from dividend income. And then $2 almost on the second month, $5, $7, $12, $23, $37, and $50, and so forth. So we're currently making about $50 a month. The total dividend income is about $402. So really nice dividend income here. And if we go a little bit further down, I started a new spreadsheet, which once again, I might make this available to everybody. If you guys want it in the Patreon group, let me know, and I could definitely do something like this. But this is just like a little spreadsheet to track my purchases. And one of the goals with this portfolio, and it's important to have a goal when you do investing, is to actually live off my dividends. So one of the things I wanted to do was to track everything I'm buying, everything I use on a regular basis, basically try to live completely off my dividends. So everything I have, everything I own is paid for by my dividends. So this is a cool little spreadsheet. I'm probably going to clean it up eventually because it's getting a little bit bigger. I might put some things together, since like a lot of the, you know, I for example, I bought like some forks, some spoons, some different kitchen stuff. I'm kind of focusing on the essentials that I use on an everyday basis. I might put some of those things together just to kind of make this not as big, but you guys can see some simple things like my daily cup of coffee. Like for example, I wake up every morning when I do my videos, I have a cup of coffee that I bought from this mug around Christmas time. You guys probably can't see, but it's got some Christmas trees on it. I put 20% of my monthly income towards groceries. We go grocery shopping with that. I bought some bath towels, some different plates and stuff like that. I bought a CD player. I did a video over that earlier where I bought a CD player. I bought some CDs. I got a new wallet. I'm eventually going to be buying a video game probably next week or something like that, because I really like video games and I'm a big gamer, so definitely will be putting some money towards a video game. And I'm kind of tracking the money here with one-time purchases. I'm tracking the monthly cost, and then I'm basically just adding up here into the total cost. And I'm not really using the dividend income to do this. I'm basically using it as a representation. I'm reinvesting the dividends. I'm just kind of role playing, like pretending as if I was living off my dividends kind of thing, so that when we eventually get to that point, I can actually do it. So I hope you guys enjoyed that little bit. I know this video is getting a little bit long, so I'm going to kind of wrap it up here. But that's just one cool little thing I wanted to share with you guys here. Alright, that's it for today's video, guys. Hope you guys enjoyed it. Let me know what you guys think in the comments. If you guys have any questions, feel free to let me know. And once again, if you guys did enjoy the video, be sure to give it a big thumbs up. That's it for today. Hope you guys have a good weekend. Enjoy your weekend. Take care, and I'll see you guys later.